been a week of geopolitical twists, splashy trade headlines, tariff drama, and renewed Middle East tension. Markets swung, corrected, and then steadied. To unpack what really mattered and what it means for the AG space, I'm joined by Bertrand Oesterle, VP of Clearing and Execution Sales at StoneX. Hello, Bert.
Morning.
Good morning. So let's start with a recap of all the geopolitics that stole the spotlight this past week, and then you can tell me whether grains and oilseeds are sticking to their fundamentals or are getting stage fright.
So let's start with the recap of the geopolitics for the past week. So there's been three main elements, and the week started kind of well for Trump in the sense that we had some news about an updated trade deal between Indonesia and the US. So the US are supposed to buy some 3 million tons of palm oil from Indonesia over the next 2 years. In return, the Indonesians are to buy 5 million tons of wheat by 2030, 1.6 million tons of corn, 1 million tons of soybean. Now, these announcements were kind of brushed away by the market quite easily in the sense that Indonesia buys about 1 million ton of US wheat per year anyway. So what's the difference by saying that it's going to be 5 from 2026 to 2030? It makes no real impact. And then the 1.6 and the 1 million tons of corn and soybean are without a specific time period. So it doesn't give us much indication. Then we had some volatility from the Iran-US situation with Trump one day saying that he's seeing some very good progress on the discussions about the nuclear deal. The next day he wants to bomb the hell out of them. Then the day after he says, I'm all in favor of diplomacy. So it creates a lot of up downs in the energy market, and obviously that can create some spillover action into grains and oilseeds. But then the elephant in the week was last Friday, the US Supreme Court saying that some of Trump tariffs are illegal, and the customs are trying to find out what they're going to do about illegal tariffs. And the lawyers started to get excited about who gets a refund, how, when. But Trump came back fighting quite quickly by saying that if anyone tries to renegotiate, it will only mean more tariffs, and he has applied 10% worldwide, which he wants to get up to 15%. So like the past year, each time we talk tariffs, the market has a tendency to correct. People see it as a contraction of worldwide trade. They get a bit cranky about what's going to happen, so we have a correction. But as Trump said, don't be fooled, nothing's going to be changed, I'll find another way. The correction was quickly forgotten, and the market came back to pre-US Supreme Court announcement in a sense.
It's a little bit like deja vu because we're almost at the 1 year mark when the reciprocal tariffs were first announced. Okay, let's move on. Let's start with wheat. What strong fundamentals are still in play, and are specs and funds, I don't know, reacting to the macro environment at all?
Okay, so in wheat, it's been an interesting week because we've had a rally, and that rally has finally broken the stock range that we had spoken about. So to try to give you an example, the May contract on Paris wheat rallied from 190 to 199 and a quarter. As I walked in, it was 197.50. So it's made a fair amount of movement over the past week. And it's been mostly about three generic elements once again. So the first one came out of the US to start, and the US mentioned that they had very high winds that came to cause concerns for part of the US plain wheat areas, especially in the areas which are already dry, as it would make those areas drier. Then the second bit that rallied the market was some floods in parts of France, the western part and the northeastern part in particular. We had Agrimaire stating that the crop conditions had reduced from 91% good to excellent to 88% good to excellent over the week, so we've lost 3%. But the market is not too worried in a way, in the sense that the 88% is still much better than the 74% of the prior year. And over the past couple of days, we've seen better dry weather, which is going to alleviate those flood worries. And the last element in wheat to explain the recent rally is demand and exports. So we've had a Algerian tender. We know that they've bought milling wheat for April-May shipment. We don't have the tonnage yet, but it should be a decent tonnage. And in terms of export figures, we've seen the confirmation for the third week running from the European Commission that the EU exports in wheat are gathering pace. They're reaching 15.4 million tons compared to 14 at the same time last year. And we know that that 15.4 million ton figure is likely to be bigger because there's still issues with reported data. It's still short of some data. And the European Commission also gave us some details about who's the number one exporter.
And who is that?
From July to January, and it's actually Romania with 4.5 million tons compared to 3.5 last year. Quickly followed by France at 4.2 million tons compared to 1.5 the previous year.
Okay.
So there's an element of feeling that there is still some demand going on. And that's despite similar good figures out of non-EU Black Sea participants. So for example, the Russians are expecting their February exports in wheat to reach 3.3 million tons compared to 2.9 in January and up from 1.9 the previous year. So demand seems to be allowing everyone to participate. And then UCAB also put a larger estimate for the Ukrainian export of wheat for the season ahead, 17.6 million tons compared to 15.8 the previous year. So to answer the second part of your question regarding the specs, the specs have a tendency to react in wheat when macro is at play. So with the uncertainty of the geopolitics over the past week, we have seen some short covering. So that short covering has been of two folds: the geopolitical uncertainty, but also the fundamental elements I've mentioned. But what has been interesting is that it's not just Chicago specs and Euronext specs overall that have covered. There is a little bit of an element to watch out for in Euronext in particular, where in the spec category, the funds have remained almost as short as they were last week, but the other specs, i.e. the financial institutions and other financials, have gone long. So it's going to be interesting at 4 o'clock today to see the COT update from Euronext to find out if those funds in particular have short covered further, and we think they have, considering that we've gone from 190 to 199 and a quarter, for example.
Got it. Okay, so I want to go back. Earlier, we were talking about China saying that they were going to review the tariff situation in due course. How is this affecting soybean, and are there any other elements at play right now?
So when the tariff situation was reviewed last Friday with the US Supreme Court, the fear in the market was that China would use it as an excuse to say, well, until it's clarified, we don't buy anymore. It hasn't been the case. China came back, as you said, saying we'll review in due course. And for the moment, we haven't seen any further confirmation that China has bought anything more. So the market was a bit jittery, thinking it's berry soybean because China might use it as an excuse not to buy. They're coming in saying nothing has changed. So we're back to the same situation, and we're just waiting for confirmation that they would be further buying.
Okay, so China hasn't really been the main driver for the past week. But when I look at the technicals, soybeans has held actually pretty steady, mostly sideways over the last 8 sessions, with RSI nearing towards overbought levels. What's sustaining the strength?
So the soybean market has found it a bit difficult to correct, even though we had the geopolitical pressure for some period over the week. And that's due to the fact that the market is awaiting what's going to happen in terms of biofuel. So if we look at last week, NOPA came actually a little bit higher than expected. So 221.5 million bushels against 218.5 estimated. And also we're still waiting for that EPA decision. So the EPA has made the recommendation to the White House. We're waiting to find out what they're going to announce. It could be end of this week, could be early next week. And people are starting to say, well, the EPA is likely to go with the 45Z guidelines that we've spoken about a month ago. If they do, then what is the market reaction going to be? If it's just as expected, is the market going to take a breather? If it's lower than expected, is it going to have a bearish tone? Or if it's higher than expected, is it going to continue to go up? So it's that type of uncertainty that so far is not allowing the market to fall, because so far the funds have been buying into those stories, and the funds are, I should say the specs overall are long, some 115,000 lots, and they're long because they expect that EPS support, that biofuel support, at a time where they still expect the Chinese to buy more. The only thing that could come against it is the Ag Forum follow-up. Excuse me. We had the USDA confirming that indeed the impression that soybean is doing better over cost than corn is translating into a likelihood of higher area in the US for the crop to come. And the USDA gave us an estimate of 85 million acres, up from 81.2 the previous year.
And has this generated any spillover action in your next rapeseed?
So rapeseed's been very interesting because we had an element of momentum to the upside at one point all the way to 495 basis May. We had spoken about this area previously where we think that around 495, 500 farmers should be interested in selling what's left of their crop to sell. We haven't reached 500, but it feels like some farmers have sold and taken the opportunity at 495. So since then, we've been in a range of 485, 495. We've been sideways, very similarly to soybean, sideways for 12 sessions, close to the overbought level, but we've come off a bit, so from 72% overbought to 62% RSI currently. And it puts the rapeseed into two types of questions. First of all, what are the funds going to do, and what is real demand? So from a spec point of view, the specs have continued to add to their position. Last week there were 53.2 thousand lots long, so they're not too far from the 63 and a bit thousand lots long that we had at the same time last year. We think that over the past week they've added, so it's likely that at 4 o'clock today the Euronext COT update will show that they may have added a bit more. But then the big question from the trade is to say, how long are those specs going to stay long in our market? And that's why it comes to demand consideration. When we look at the import figures from the EU, they're 2.75 million tons so far this season. That's much lower than the 4.3 at the same time last year. And people are asking the question, there's two very divided opinions. Some are saying it's evidence there's no demand, so the specs have got nothing left to do in our market. The farmers have taken a bit of money here. Maybe it's time for the specs to take their money and go elsewhere. So that's the first element. The second element, people are saying, well, that 275 import against 4.3 might just be a delayed reaction because the Ukrainians are still not exporting as fast as they were before. So we're still unsure about real demand in Europe.
Very complex indeed. Okay, let's finish with corn, please.
So corn, very similarly to oilseeds, is waiting the decision on biofuel, and we feel that the market is positioning itself for expected demand. We see it in the EIA US ethanol stocks, for example, which are 25.6 million barrels. Usually when they get bigger, it is for some an indication that demand is about to happen. At the same time, the Ag Forum came in with a lower area estimate for the crop to come. So that would be 94 million acres compared to 98.8 the previous year. But so far, the specs are still remaining short.
All right, understood. Bert, thank you so much for all that valuable insight. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.